Okay, good morning, everyone. I hope we're all having an awesome morning today. You're most welcome to today's episode of the Market Snapshot. Today is the 27th of June 2024, and I'm happy to be with you guys today for the snapshot. So, today we're just going to focus on the US GDP, which of course is the main market news event that we are having today. But before we do that, I just want us to go through the watch list of the different assets to see how the markets are doing as of now. Now, to start it off, I'll just speak briefly about gold. Yesterday, we saw gold having, very rare price action for the very first time, where we saw it closing below 2,300, and at the moment it's just a bit above 2,300, but it's we are most likely to see maybe possibly gold breaking lower later in the day, but we may have to focus mostly on the US GDP report and see how that affects the price for gold. Going over to other things like silver. Silver also performed relatively bearish yesterday, where we saw it also breaking below $29 an ounce and even moving further lower. So of course, there are still further points lower where silver could seriously sell to. But for now, we are seeing some bit of bearish momentum, and we can say for certain now that silver is possibly off its highs that it had around the 28th of May. So yesterday, when I observed gold's price action, I noticed that silver was actually having, rather, I noticed that gold was looking relatively bearish, and I was waiting to see how it would perform later in the session, but we did not see it buying back aggressively like it always does whenever it visits those lows. So maybe this time round, gold is going to get used to being below 2,300 and could possibly open its levels to go below 2,300, possibly to 2,240, 2,250, and possibly even lower. Now, trading economics here is saying that gold held around $2,300 per ounce on Thursday, hovering at its lowest level in 2 weeks, weighed down by a stronger dollar and higher bond yield. So this is true. And of course, that's why I want us, of course, to focus on the DXY. And I'll go over to the DXY to show you that possibly one of the reasons why we're having a relatively weak gold could be on the back of a resurgence, a resurgence of the dollar strength and a push higher for the dollar. Now, it's also saying that traders are now focused on the US economic reports due later this week. Key focal points include the Friday's core PCE index data. That's on Friday. And of course, for PCE, we are going to go over it tomorrow, where we shall be focusing on the Fed's preferred inflation gauge. And we're also saying that alongside the third estimate of the Q1 GDP growth. So we have quite a number of events that are most likely going to provide further direction for gold. And should we have a strong GDP report today, that is going to open doors for gold to move further lower, opening it up to levels below 2,300, and we should see how it evolves there. Now, of course, we are going to go on the charts and see how gold has been trending and where it could go. But if you see, gold has been in a strong upside momentum, and even after it entered into this channel, that was around that NFP we had for April, if you guys recall. Ever since gold entered that channel, it has been looking very, very bullish. And every single time we've been selling it back to these areas here, it's always kept buying back up from these areas, showing us that gold is relatively bullish. But this has been on the back of a weaker dollar. But now that the dollar is testing higher levels, I think it's going to allow gold to get relatively bearish in the short term. Awesome. So let's cross over to the DXY. So we're going to look at the DXY on the. I want us to look at the DXY on the on the daily to see how it's performing right now. So when you look at the DXY on the daily, I'll just repeat that the DXY actually has been on a steady uptrend. We've been seeing it rising very nicely from this level here that we had around the 29th of December, and it's been on a steady uptrend. Okay. Now, when we reached this peak that we had around April, which was around the 106.510, DXY sold from this level. It then attempted to buy back again to that level, and then it created what we can term as a double top. So that double top that was formed in April, which was also the same time when we had weak weak NFP report, allowed gold to rally and buy all the way to 2,400. So now we are seeing DXY making a comeback. Okay, if we are to add what I usually call a water bowl, I can add it here for you. So you can see this is what we have happening on DXY. We have sort of like a water bowl formation of some sort where we saw DXY going into a sell, and then we saw that sell, switching and then now switching into a buy. Okay, so this is the kind of price action we've had on DXY. So we sold into this area, and now we seem to be buying now back to where we had that double top area that's around 106. So we have to keep an eye on what happens today. Now today we have the GDP report, and if we have a strong GDP report today, it's going to allow the DXY to possibly move higher and possibly break its May highs, that will then allow it to move all the way back to 107, which for now is the resistance point for it from October lows, from October highs last year. So aside from us having GDP today, if we did not have GDP today, it's very, very likely that DXY would still even buy. Okay, seeing how bullish it is from these lows we had in June, from the start of June, we are seeing a steady and strong uptrend on the DXY. Now, of course, it's also important to say that if the DXY is able to reach its highs where it had that double top and cross to 107, it could then allow it would then allow gold to possibly sell. And the possible levels for gold to sell to most likely could be even as low as 2,100. That's if it enters a very, very serious sell. But in case the sell is not too strong, then I think gold will just have a bit of a pullback that will allow it to recover. Now, we are going to go over trading opportunities on the MT5, but I just wanted to show you this on trading view. This is what we have on gold at the moment. Gold has been in a range since the start of April up to June. And the latest bearish pattern we have on gold is actually this pattern here, which I would term as a bearish flag. So bearish flags typically tend to form in a bearish market, and we are now currently seeing one for gold on that on that H4 time frame, and which is a sign possibly that we could see gold selling and getting into this zone all the way down here. So again, guys, that is really dependent on how the GDP performs, and of course even the PCE. So let's look at the GDP data that we are expecting today. Then we can cross over to the MT5 to look at how the other assets are going to trade. So we're going to have three data sets that are going to be coming out. The first data set is going to be the quarterly GDP, which we're expecting alongside the GDP sales report, and then alongside the GDP price index. So for the GDP quarterly report, we're expecting Q1 GDP to be released today, and we are focusing on we are focusing on the previous and then the forecast. So let me just open my calendar here. Just give me a moment. So if we get to the calendar before we go to each specific data set, I just want us to focus first on the calendar. So for the calendar, this is what we have. This is what we have on the calendar. Okay. So for the calendar now, guys, again, I'm focusing mainly on GDP because that's really what's going to move the markets today. So we have so many things on the calendar, but not everything is going to affect the market. Maybe the other thing that might be important for traders is the durable goods orders, which are also coming out at 3:30. And of course, before that, we also have the jobless claims, initial jobless claims. Oh, initial jobless claims are coming out at the same time as the GDP report. Yeah, but what's going to be of major importance today is the GDP data. Now, the first data set we are focusing on is this one here. Let me just see if I can just do this so that you can see it. So this is the US GDP, and we're expecting a release of quarterly GDP for the US. This is Q1 GDP. So when you click on this item here, it will open this for you. Okay, it will open this for you. So you'll be able to see just the statistics of how the GDP has been performing for the US, and you can see that we've been having a relatively strong GDP for the US for the entire month of uh, of 2023. We saw that GDP was in positive territory, and however, it was not increasing too quickly. But then, as we finished 2023, which was the end of last year, we saw that GDP actually popped and it went as high as 4.9% and then stayed there for some time before now starting to decelerate. So currently, where we are at, the latest the latest data we have of US GDP is it's in positive territory, but we had a drop recently from 3.4% to 1.3%. So the main focus for today, and also the reason why we are seeing dollar buying into the GDP release, is we are waiting to see whether we actually have a resurgence of GDP. If the GDP resurges and possibly moves higher from 1.3% possibly to perhaps maybe 3%, and possibly even as high as 4%, which of course is really on the far side, but also a possibility, that's going to tell us uh, that the US economy is expanding at a fast pace, and that will then allow the dollar to perform better. Okay. So, what that means, of course, for those of you that are trading gold, is that gold will have some bit of trouble sustaining that area above 2,300. And of course, if the GDP comes out much higher, we could see gold collapsing below 2,300 and staying below it for the rest of the time to come, for the short term to come. Now, the next data set, we are focusing on the GDP price index. So the GDP price index is not as important as this one here that we are just from going through. As you can see that every economic calendar, whether it is investing.com, whether it is Forex Factory, they all arrange the data according to the impact on the market. So this one, it's saying that expect high volatility, okay, because it is the most important data for this particular series of GDP. Now, the one that is after this one is the GDP price index. So the GDP price index, I had opened it somewhere here. I just need to look for it. I think it's this one. Yeah, it's this one here. So this one it measures the annualized change in the price of all goods and services included in the gross domestic product. And it's saying here that it is the broadest inflationary indicator. A higher than expected reading should be taken as positive or bullish for the dollar, while a lower than expected reading should be taken as negative or bearish for the dollar. So again, this is not as important as the one that we are just from discussing, but it can also have an impact on the dollar. Now, when you come back to your calendar, typically, when we are looking at the release of the data, we are going to focus on all three. If we see an increase on all the different data sets, that is going to spell a very, very strong dollar. And if we see maybe a slight decrease, a slight increase, maybe a slight decrease here, that's going to spell mixed data, which then, of course, will also we shall then see a choppy price action, okay, where the market is not really, it hasn't really processed the data too well because the data is mixed. So in the ideal situation, we want to see GDP increasing on all fronts. That is GDP sales, the GDP price index, and of course, then also the GDP quarterly data. Awesome. Now, I want to speak about the initial jobless claims. Okay. The initial jobless claims here, we're expecting that that data is going to come in lower from 238K to 236K. And this, of course, is a bullish sign for the dollar. If it comes in even lower than this, that would mean that Americans that are filing claims, jobless claims, are fewer. for this week, and that would mean that it's the economy is doing relatively well over the course of this, because claims are released every week. So if we see lesser and lesser jobless claims, it's normally bullish for the dollar. Awesome. So I think really going through the rest of the calendar, we don't really have that much, I would say. Maybe just to give ourselves a sense of how the markets are, it's important to note that for since the week began, Monday to date, we've been seeing the dollar pushing higher and higher. And it's not only the dollar, the US dollar, we're also seeing that US yields are also pushing higher. So I think all this is really playing a big part in the dollar strength. And we just have to continue monitoring the markets to see where the opportunities are at. Awesome. So guys, if you have any questions regarding the GDP, you can always drop them. But for now, let's cross over to the charts and see where the charts are at the moment, and where we can expect them to go. So let me just quickly share uh, my my screen. Give me a moment. Okay, so this is what we have. Right. Mm, let's see my MT5. Okay. Of the MT5. Okay, so this is our MT5, and this is what we are currently seeing on the charts. All right. So I'm going to start with um, with Nasdaq. Okay. Uh, I know it's not too popular. Okay, let me move over to gold, because I know gold is really what is really what most of you are trading. Now, yesterday, I did analysis for gold. I was expecting gold to actually buy, not really to this area here, but just expecting a push higher. But as you can see, that didn't play out. But instead, we saw gold selling, and it sold down to this area here. And again, guys, like we've been seeing, every single time gold sells to this zone, it always buys back. Okay. The only difference between the price action that we saw yesterday and the one that we've been seeing previously is that typically whenever gold pulls down close to 2,300, we tend to see a move of about 200 pips over the course of a day, sometimes even the course of maybe a few hours. But yesterday, for some reason, first of all, gold closed below 2,300. Okay. Gold closed below 2,300, which was a first because gold has not closed below 2,300. I remember there's a time we had NFP, the NFP for May. If you can look at this candle right here, okay, this was the NFP candle. Gold rejected that area and closed above 2,310. But yesterday we saw gold closing below 2,300. Now, as of this morning, gold is looking relatively, it's holding its zone around 2,300. But since we have the GDP report a few hours from now, it's going to provide gold a lot of it's going to really impact gold a lot, whereby if we see a strong GDP report, we are going to likely see gold breaking this area of 2,300 and then entering this zone, which I can call my demand zone for gold. If we see gold entering this multi-day demand zone that is below 2,287 and possibly failing to move higher, take out that liquidity before it sells, if it is one fully blown sell, gold is most likely going to stay below here. It's going to break below, first of all, 2,300, and then it's going to aim for these areas of 2,272. But all that is dependent on how strong the GDP report is. Now, is it possible that we can see gold moving back higher? Yes, without a doubt. I think before the report, we could see gold moving higher because at the moment we're expecting a weaker GDP report for the US. If the report comes in strong, gold will now reverse its gains from London and possibly trade lower. So how can we go about trading gold today? So first things first, you might want to set your sell stops below 2,300 because you do not want to miss out on a nice break below there, guys. If gold has strong price action below, then it's going to open up doors for you to trade even lower. Okay. Now, if we see a strong GDP report, it's going to allow gold to recover and it could trade even back to this area of 2,322 and even further higher. Okay. So all that is dependent on how gold does. Now, I also want to focus on silver to see how silver performs, because if silver sells today, then I don't think gold is going to manage to buy. It's most likely going to end up selling, and going to that area, this area down here. So let's cross over to GBP USD. Now, GBP USD, yesterday we discussed sales for GBP USD. However, uh, of course, okay, I don't know if this is my recent. Yes, yesterday we discussed sales for. Oh, my apologies for that. Mic check. Can you hear me? Mic check. Mic check. Is it still muted? Okay, it's fine now. I think it should be fine now. I think it should be fine now. Awesome. So let's proceed. Yeah. So I was telling you guys why how we have a death cross. I think the mic is now fine. The mic is fine now. Yes. Okay. So let's proceed. Yeah, so I was telling you guys how we have a death cross on GBP/USD. So we saw this death cross when GBP/USD was trading around this level here, okay? And we have seen that ever since the death cross appeared, the trend has stayed bearish and is possibly progressing to sell. Now, I want to just start by focusing on the fundamentals for GBP/USD. First things first, we are going to first look. We first looked at the DXY. For those of you maybe that joined us late, the snapshot will be recorded, so you can always refer back to when it began. We said that we are having a strong uptrend for the dollar. We're having a strong uptrend for the dollar, and that is affecting the pound by us seeing how the pound is selling. Now, second thing is we also have an election in the UK. The UK is having an election on the 4th of July, okay, and that of course is going to spell a weaker pound. Okay, so we should see the pound selling. Potential levels for you to sell the pound to. We need to first see where it was in April. So in April, we had a very sharp buy for the pound from these areas here. We had a golden cross also around this area here, which has a sign of a uptrend, and the uptrend continued all the way this way. Okay, so hello, hello, how is the sound? Can you hear me, guys? Mic check. Okay. For those of you that may not be hearing me, I think kindly check on your mics because I believe my sound is fine. My mic is fine. Yeah. Okay. So let's go back to what we're saying about the pound. Now, the last time we saw the pound rallying, it was from this area here. Okay. Let me just zoom in on it here. Okay. So these were the lows that we had for the pound. Okay. From this area here. So then this around this time was when we had the Bank of England conference, and they mentioned that they were not ready to cut rates. So that allowed traders to then go long on the pound. So the pound launched a very sharp buy that took it all the way. We had a golden cross at this area here, which also signified the start of an uptrend. So we kept buying and buying and buying. Now, here, This level here became a barrier for the pound, and it's here at this point that it started having its downtrend. So this downtrend is very clear on the pound, as you can see. And at the moment, where we could definitely see the pound selling to is, first of all, to this Fibonacci retracement here of 1.26. This level here of 1.26032. That is where we had the pound breaking through around this level here. Okay, so this is where we should be aiming to sell. Now, after, if this level is taken out, then the next level is going to be here where we had our golden cross. So notice that the golden cross was here, the death cross was here. Okay, which means that now this is signifying the start of a downtrend for the pound, and we are likely to see more further sales for it, possibly towards these areas here. Now, us having a sell for the pound dollar does not mean that it's now in a bearish trend, because it's still above its April highs. So which means for us to see the pound selling even more, it has to first take out its April lows, which was somewhere around here. Okay, so for now, I think we should aim for some sales on a pound and set our stop losses around this area here, just in case we have a strong GDP report today. Then I think this would allow the pound to come back to this area here where we had a death cross. But the death cross is still there, so which means more downside is very likely for this pair. So let's cross over to Euro USD. Now, Euro USD, yesterday we are expecting a buy. Uh, this is, I think, old analysis for the euro, because I'm seeing this is on the 20th. Okay, this is on 20th. Awesome. Anyway, let me just remove these arrows so that I do not get you guys confused with these arrows here. At times I don't really remove the arrows, especially when I still uh, feel like the analysis could still play out. So, anyways, for euro dollar, we also have a death cross. Okay, so the death cross, however, appeared sometime back. Okay, and it's at this point when it appeared that we should have gone short on the euro dollar. You can see it here. Let me just point out the arrow where the death cross is. Okay, so the red line is my 200-day moving average, and the 50-day is the blue line. So whenever I see the cross, then it helps me to tell the trend. Now, it's a no-brainer that euro dollar is selling. Okay, and where it could possibly sell to, so that you can organize your trades, we are first going to take out this level here, which of course, where you're seeing oh, actually we have already achieved this level, because I'd marked this level of 1.06842. Okay, I'm seeing that we have already now achieved that level. So the next level for us to aim for is going to be 1.06 1.06022. Okay, yeah, and that is very likely, because having looked at the DXY, if the DXY breaches 106, guys, then euro dollar is most likely going to achieve this level down here. Okay, which is where we have that 1.06022 zone. Now, this is also dependent on where on the kind of data we have for GDP. If we have a strong GDP report, then it's going to allow the euro to sell very, very easily, because that will then spell dollar strength. Okay, let's keep an eye on those levels to see how price performs there. Now, in the event that we have a strong GDP report today, we are going to first aim, we are first going to see how it performs along this area here. If we take out this zone, then we are going to be aiming for that 50% retracement level there on the fib, which is 1.08. But before it gets there, the first level for it to take out is going to be this level here, which is that 107,223. Okay, and we're just at that area just on the 25th of June, which was just 2 days ago. Okay, that was 2 days ago, if I'm not mistaken. I think it must have been a Monday. No, sorry. Today is Thursday, right? Yeah, so that was on Tuesday. Okay. So let's just keep an eye on the euro to see how it performs along these areas here. But the trend is bearish. And if anything, Even if we did not have GDP today, even if we did not have GDP today, I think we would still have a bearish euro. Okay. Now, for those who are looking at selling the euro, it's important to know how far down it can sell. At the moment, we have really pulled back a lot on this pair that it's now entering where it was in April. And if we take out this April low, which I have marked there, I think it's very likely that the euro is going to sell and uh, go back below these areas to go back to where it was in September. Okay. Now, the time when we had the snapshots around this time of April, I was very, very confident that we were going to reach September lows. That didn't play out. Something helped the euro to buy. It's I think around this time when the DXY topped. So the euro started buying, but now it's now reversing to come and attempt the September lows. Now, when you talk about the fundamentals are not really supporting a strong euro at the moment, especially when you see what's happening in France. At the moment in France, there is a lot of instability, and also the current favorite for the presidential election is a lady. She's called Marine Le Pen, and she's most likely going to win the election. So that is not in many the markets are not in support of her victory against the current president. So it's affecting the stocks across Europe. It's also affecting the euro currency. Okay, so keep an eye there, guys. And it's also at this point that I should also talk about the DAX, since I'm also on euro. Okay, so I've actually been selling the DAX quite a lot, guys. This week has been really good for me trading wise because I've made quite a bit of money on the DAX. I've been selling every single spike that the DAX has had. Every single spike the DAX has had, I've been selling it. Okay, and for me, I usually trade, of course, technicals, yes, but I mainly focus if the index is weak because of instability, you're most likely going to have to sell it every single time it tops. Okay, so we've been seeing that happening with the DAX. Even right now, I have some sell positions on the DAX, selling it back to where it was, down here. So not only the DAX, but even the euro, all of them are getting affected by that instability. So if we see a victory by Lapon, or that lady, she's called Marine Lapon, I think the euro could sustain further losses, possibly taking it back to this area and even further lower, closer to the September lows. Awesome. So let's go to USD JPY. So USD JPY, of course, hasn't really been that much of a discussion for during these snapshots because it's been a buy. Okay, and when these assets are in a buy, really, what more is there to say? You're supposed to just be buying the retracement. If the retracement appears, then you buy. When a retracement is there, you're supposed to set your buy limits. When it retraces, it triggers your buy limit, it goes with it to buy. Okay, so we can't really say too much about some of these pairs. It's just best for you to set your buy limits. Now, the other thing also, it might also be important for you to see on average how many pips does USD JPY pull back by before it buys. Okay, so you'll notice that we always get a retracement. Maybe I can use GBP JPY for this example. So before, we've always been having a push higher, we always get a retracement. Okay, then the retracements have been appearing. If you look at the charts from May, they've been there. Okay, you know, so like for instance, like here, I can just use microsayer to measure. This is a pullback of about 190 pips before we pushed higher. We had another pullback at this point here. So these ones are much bigger pullbacks, but for scalpers or for day traders, you're looking for pullbacks that are much smaller so that you can manage to make money within the day. So for instance, like here, we are seeing a pullback of 100 pips. Okay, so the 100 pip pullback, then of course, if you have your buy limit there, triggers your buy limit, pushes back higher. Same thing also here, pullback of about 100 pips, a push higher. So maybe then you might want to have a buy limit on GPP JPY. Set your buy limits about 100 pips below the market price so that in case you get a pullback, you can have a much better entry point uh, for you to have more profits. Okay, yeah. So that's how you can trade GPP JPY. I was discussing with some traders, and there are some traders that have been bearish on GPP JPY because it seems overbought. But guys, I can tell you for a fact this thing is going to keep buying. It crossed 200 yen and it kept buying, and all this is because um, the carry trade is also affecting this particular pair. So we should see more strength here for GPP JPY, possibly taking us even up to 212. Okay, it's very, very possible for it to reach there. But use that strategy. Set your buy limit below the market price by 100 pips. A pullback buy limit is triggered, pushes it back up, and then you can be able to benefit there. Awesome. Guys, let's cross over to USD card. USD card. So USD card, we had a nice buy yesterday when we discussed during the snapshot. For those of you that were on, we're looking to buy USD cards. Since it was holding this demand area here, so went into a buy. At the moment, it seems to be pulling back from that zone. Okay, it seems to be pulling back from that zone, but I'm bullish on USD cards. I'm expecting it to continue and buy back higher, all the way to this way, especially if we have a strong dollar, rather a strong GDP report. We're going to look for buys on USD card. Now, at the moment on the H4 time frame, we have a golden cross. Okay, no, we have the 50-day touching the 200-day, and the 50-day is also above the 200-day, which is a sign that we need to buy this asset. Okay. I had my channel here, but I don't know what happened to my MT5 because my channel seems to have vanished, but it was somewhere here. And I was expecting that we are now going to start breaking these areas here. So here we had a test, but no break. Okay. So we are going to have a retest and we're going to have a break. Okay. At this point. So strong GDP should now take us there. That should allow us to have a break and then move up to where we were around this area here. That's for USD JPY. So let me just sum it up with the indices and then we can call it a session before I handle your questions. So for the indices, I was expecting a pullback on Dow Jones. If you guys remember from the snapshot yesterday, I didn't change these tools I had put here. This is yesterday's snapshot. So I was expecting a pullback for the Dow Jones, but my pullback, I think, was exaggerated a bit because we did not have that much of a pullback. We saw it pulling back only to 38,900. So I don't know if you guys were able to pick this up, but buy limits are really, really important because it's only with buy limits that you can grab these nice areas like this. So you can see we pulled back, but there's still some hesitation for the Dow. Okay, the hesitation for the Dow is a lot, and I'm expecting it to sell today. There's going to be an initial sell, possibly back below 38,900. And if we breach 38,900, then we might see a push lower all the way up to 38,700. But for now, just keep monitoring to see what happens there. But the bearish momentum is still there. We failed to break this barrier here of 39,600, and despite us having a golden cross, okay, we are now close to our 200-day moving average, which is a sign of downtrend. Yeah, so just keep monitoring it there. Now going over to Nasdaq, I was expecting Nasdaq to have a much further push higher yesterday, but that didn't materialize. Okay, and instead now we've seen it selling. Okay, now the other thing I've also seen about the Nasdaq is that the Nasdaq has also been showing a lot of bearish momentum. Okay, especially around here. So if anything, I think we are most likely going to retest our lows we had on Monday, which is somewhere around here. If we get a weak GDP report, then I think this is going to allow the Nasdaq to sell and possibly come back to this area here of 19,500. So, guys, that's it from me. And of course, let's just wait for the GDP report. It's time to take your questions. If you have any question, then you can send it through. Okay. So let's see. Leili Bahuma, you're saying what time is GDP? You're saying what time is GDP? The GDP is going to be at 3:30 p.m. The GDP is for 3:30 p.m. The GDP is for 3:30 p.m. Mhm. Malombe, you're saying you setting any sell limits on euro dollar? Not quite. I don't think I'll be looking at setting any on euro dollar. So for a sell limit, you're expecting that if price moves up, it triggers the limit order, and then it sells. Okay. Yeah, I think that's a good approach, Malombe, for it. Especially now that we are seeing that it seems to have reached our lows here. The best approach for it might be a sell limit, so that in case it spikes up maybe later today, or possibly before the GDP report, you can grab as you can set your sell limit possibly maybe along these levels here. So where are the possible levels to set my sell limits? I think anywhere up here, anywhere closer to 1.07 is a good zone to set your sell limit. So here, possibly maybe even here, you know, so that markets can come, take out that liquidity now, and then move lower. Yeah, so that can suffice, Malombe. What analysts predicting for future of gold? Okay, so I think really for gold, if we go to Google, just give me a moment for me to go there. For what I've read is, first of all, let's put this into context. Gold is in a bull market, guys. Gold is in a bull market. I think without a doubt, yes, we're looking at gold selling a bit here and there, but it's in a bull market, and it crossed a 4-year resistance level. Okay, 2020, 2021, 2022, 2023, we took out a 4-year resistance. And now we are moving higher. Okay, so gold is now in a bull market. So we've been getting crazy forecasts for gold from some of the banks like Citi. Citi is expecting gold to move to $3,000 and an ounce. We've been having a lot of these crazy forecasts on the demand of on the chance that maybe you are going to have more rate cuts by the Fed, rather the Fed starting its rate cut cycle, which is this year. Then also, if you bring in all these, uh, you know, uh, talk about BRICS also, building or coming up with their, forgetting what it is, their gold-backed currency. They want come up with a gold-backed currency. So all that news, I think, and speculation is pushing demand for gold, not only from institutions, but even retail. The other day I was watching a video on YouTube, and it was saying that people are buying up gold from Costco. You can find a video on YouTube and saying that it's just a review by this newspaper. They're saying, why are people in a rush to buy gold at Costco? So it's not only institutions that are bullish on gold, but even individuals like us. There are people are buying gold. And it's not only gold, but even silver. So really, I would say generally the outlook is for gold to keep pushing higher and higher and higher. Yeah. And we are also faced with a year that has a lot of uncertainty because we have the US election ahead. So the US election always comes with a lot of fear about who the next president is, what the next president's, you know, uh, what his policies are going to be around trade, around what, all these different things. So in times like that, it's always popular or common that people rush to safety. And of course, gold serves that purpose of safety. Yeah. Awesome. So any other questions? I think that's really it. Do you have any more questions? What are your thoughts on so let me start with Bitcoin. I don't really have much to say on oil, but I'll just go to its chart and see. But for Bitcoin, I think we've been having it on trading on our MT5 here. You can just see it here. So for Bitcoin, this is what we are having. We are right now stuck in a range there. Okay. This range, we've been stuck in it for quite some time, from late Feb all the way up to January. Rather up to June, we're still stuck in that zone. So the breakout for Bitcoin is going to come, but before it breaks out, I feel Bitcoin wants to test lower levels. You can see how the price action is pressing Bitcoin lower. There are no signs of any bullish momentum with Bitcoin's price action. Okay, I'm talking to price action traders. I know we are many. Price action traders, we believe in what we are seeing with the price action. Price action for Bitcoin is bearish at the moment. Okay, so the breakout is going to come, but not yet. It's going to come soon, but not yet. Okay, yeah, we are hovering there before we get a breakout. Now, if we go to US oil, US oil, let me see what we have on US oil. I've not really been checking out US oil. I'll be honest with you, so I can't really say for certain how it's been doing. I think it's somewhere here on Trading View. Yeah, so US oil has been steady bullish. It's been there in a steady uptrend. I think the last time when we discussed it, we were expecting it to sell. I think this was here, but instead it bought. Yeah, so it looks to be in a steady uptrend, looking quite bullish at the moment. You might want to monitor key levels of confluence, support, resistance, where it can possibly move to. So you might want to mark those levels, possibly levels like this. Those are your confluence points for oil. Okay. Then of course the most recent one, which is here. So if we break that one, then we are possibly moving higher. If we again, guys, oil is stuck in a box, okay, on a H4 time frame. Clearly, I think it's clear it's stuck in a box. I think you can see this very clearly. We need to see what happens there. Okay. We were in a steady uptrend here from this area here, you know, then we got stuck in this box here. So we need to see if we break above it, then I think it's going to aim for that new confluence level of resistance, which is $84 a barrel. But for now, I think we should be looking for some buys there. Stops, of course, you count your stop loss with your risk level, put it slightly below in case the price reverses. Then you don't get trapped, with that. Awesome. So, guys, I think that's it. Give a little emphasis on Nasdaq. I've already covered Nasdaq, Alex. So I said Nasdaq is looking relatively bearish at the moment, and it could sustain further losses, especially if we get a weak GDP report today. But when I trade my indices, I normally focus on order flow. Okay, so check the order flow to see how are the stocks doing in that trading day. If the stocks are weak, Nasdaq will sell. Okay, if the stocks are strong, Nasdaq will buy. Yesterday, for example, Nasdaq failed to sell too strongly like its counterpart Dow. And of course, the reason for that was Nvidia was up about 5% yesterday. Apple was up about 2%. So all that failed to see, all that failed for played into the part for us not to see a weak Nasdaq. If the market opens with us with weak stocks today, then without a doubt, Nasdaq is going to enter into a pullback, and possibly we shall see it selling all the way down that way to the downside. Awesome. Guys, I think that's it. S&P 500, Hillary, again, I haven't really looked at that chart in a long time. I'll be honest with you. Can I do analysis on it today and then come back to you on it tomorrow, so that I give you something that is, well analyzed. I don't want to give you half-baked analysis on it because I've not checked that chart in a while, Hillary. All right. Awesome. Thank you, guys. Thank you for tuning in. To my Kenyan comrades, I hope you guys are doing awesome. I hope you guys are doing awesome. I hope you guys are doing awesome, and I wish you guys all the best. Stay safe. Cheers, guys. Happy trading, and we meet tomorrow.